Hey there, hi there, ho there. Welcome to my Counting 1110 lecture on Chapter 2. I have a goal for this lecture. I would like to learn about accounts. In our worksheet in Chapter 1, each one of the columns we called an account. You had an account for cash, an account for accounts receivable, supplies, and so on. When you worked on a worksheet, they each had their column. For the rest of our semester, we're going to use T accounts to refer to accounts. Catchy name for that, isn't it? And on top of the T account goes the name of account. And the T account has one side, the left side, which is called the debit side, and the right side, which is called the credit side. Every transaction is posted into accounts. I'm going to demonstrate the cash account for you. The cash account is an asset account, and it has a debit side, and it has a credit side. And as you learned already in our chapter, cash is an asset, and when you want to increase assets, you debit them. So if I would like to increase my cash account, I would say debit cash for $1,000, let's say. That means I made the cash account bigger by $1,000. And maybe I say debit the cash account again. So you would know to enter another $500 to the cash account. We would debit it. The cash account now has a debit balance of $1,500. Let's say our next transaction credits a cash account. It credits a cash account for $900. That means make an entry on the right hand or the credit side of the cash account. It makes it smaller. To credit an asset makes it smaller. I could now say the cash account has a balance. The way to balance an account is to add up the debit side. We have $1,500 in debits, and add up the credit side. We have $900 in credits, and subtract one from the other. Since our debits are bigger, we know the account is going to have a debit balance. 1,500 minus 900 is 600. This account has a $600 debit balance. 2 debits, 1 credit, some math, and a double underlining. Whenever you double underline an account, that means that is its balance. You've checked the math twice, and you're done with it. Our cash account now has a $600 debit balance. In accounting, when we illustrate things, we often use the T account to explain things because it's so darn easy to draw and balance. In a real accounting system, accounts, or a standard form of account, looks much more like this. It has a date for the transaction and an explanation, which we generally don't use, but if you're using a computer, it will be transferred in for you. Posting reference, which we'll talk about later, a debit and credit column, and a balance. If you look, there is a T in this account right here. And in our example, the account would have been debited for $1,000, and it would have a debit balance of $1,000. It would be debited for another $500, and it would have a $1,500 balance, and then it would have been credited for $600, and it would have a $900 debit balance. Sometimes in your homework, you have the luxury of using T accounts. Sometimes you need to fill out full standard accounts, which look much more like the exhibit I just showed you. A real accounting system uses a balanced column account, and it's called a balanced column account because it carries the balance in a column on the far right. You don't need to write if it's a debit or credit in that column because it's assumed if it's cash, you know it's an asset and it has its normal balance. Only if an account were to have the opposite balance that it usually has, would it have parentheses around it. Sorry about that phone ringing. I had to answer that call. Oh, jeez, hold on. Sorry about that. The hazards of working at home. So, let's summarize quickly. We have T accounts, and T accounts are just what they say. They're accounts written in a T format, easier to illustrate in total when doing illustrations. And then we have how they look in an accounting system, a standard balance account format, and that's how they look in a real accounting system. It's easy to picture a T account because you can see a T right in the middle of it and you keep a balance running on them. But when we have T accounts, we only balance them when we need to know what the balance is. So, let's move on. Thanks for joining my pencast on accounts.